about LVMH, which stands for Moet Hennessy Louis Vuitton. Or I got the order slightly wrong. LVMH, Louis Vuitton, Moet Hennessy. So what that is an aggregation of Louis Vuitton, which is a luggage maker brand. Everybody knows that. Moet, of course, is booze. That is champagne in particular, and Hennessy is also booze. That's kind of like a brandy range. But we'll talk about it in a minute, because there's all sorts of things going on here. Apart from the liquor, there's also the fashion, the handbags, a big watch business, perfumes as well. Plus, they own some selected retailers, like, for example, the Sephora chain and Bon Marche, which is some kind of a French retailer. It has a market cap, it's the largest of the lot, of 116.5 billion euros. Price earnings ratio 26.42, dividend yield of 1.74. This is the one amongst others that has done so well. Let's have a look at the share chart. You're going to see it's looking handsome at the end there. Wayne?
Yeah, no, look, this company has done well. Look, it's been drinks and Louis Vuitton are the big drivers. Perfume was a little bit flat. Not too sure about their retailers, but I mean, they're going out there to buy Dior now.
Yeah, the retailer is a big part of turnover, but not that much of the profit.
Of the profitability of the company. Look, I mean, obviously this last period they'd had spectacularly good results. They had turnover up, you know, as I said, in the drinks and in Louis Vuitton.
And the drinks is obviously 22, a market leader in all sorts of categories and selling a lot in emerging markets as well.
And they seem to be getting their online going quite well for them, and their last results, I mean, you can look at the share price, truly were fantastic. I mean, they did extremely well.
After a period of some underperformance. So they must be getting a lot right, particularly in the fashion and retail environment, because Louis Vuitton obviously sells those very expensive handbags and luggage, but there's a core kind of consumer who will buy that stuff, irrespective of what the margins are.
So I mean, leather must be a third of their group or
third
something.
Of revenue, and in this reporting period anyway, more than 50% of profits.
So I mean, clearly very successful, and they seem to have fought off the cheap Chinese rip-offs. They just, that threat seems to have just completely dissipated.
So they've got the manufacturing down. They make magnificent stuff which lasts, and then of course they're kind of collectibles. Okay, so what happens next? I mean, we know that there has been quite a lot of concerns around terrorism in France.
Yes, and that also affected a few of the companies.
That was a bad issue in 2015, 2016, but part of the share price moving is the anticipated return of tourists to Paris, to the boutique stores.
Look, I don't know whether that's happening. When we discuss Richemont, we'll talk about that again. But I mean, the company's got very low debt. It's got serious cash. They themselves are quite cautious of the next 3-year outlook. I mean, they themselves talk it down, saying, you know, turnover flat, revenues flat. They're a little bit, I must say, I'm not entirely sure why, but they're a little bit cautious about the outlook. But I mean, clearly this is high quality company.
Because the demand will come from where it comes. It's travel related.
Look,
the Middle East has had a tough time, but of course there's quite a lot of demand from there, and oil prices have at least been stable. The wealth effect from equity markets going up in America means that the American markets has been quite strong. Europe looks to be on the mend.
Look, Europe's not that big for them. It's only 10-15%. Their big ones is Asia and America, about 30%. Maybe even more, 30-35%.
Because that's where the existing rich live, and where the newly rich are coming from.
So I mean, the weak dollar might affect their results coming out, and of course the way the people shop in this market is they arbitrage. They're very mobile. So if the one currency is up and the other one's down, they'll buy the same thing in a different destination.
Is what we saw. A lot of these luxury goods were selling out in London because the prices were in the window. Because of the Brexit thing. Just one question about management here. Bernard Arnault, who is the controlling shareholder of this, controlled LVMH through Dior. Then he did something or another where he took his controlling stake in Dior and issued more shares. But one way or another, the family consolidated its control of this entity. I think they've got more than 50% of voting rights. Does that sort of family ownership a problem? It's in a way also guarantees some sort of long-term succession.
Clearly they've been successful in doing this, so no, I don't think it
And it means then that it sets the tone with regard to
Look,
not messing with
they're all
things.
looking for acquisitions, all of these companies, because you can't create a brand. You just can't. You got to buy something that's been around 50, 100, 300
Yes.
years, or ever long. So everyone's looking for acquisitions. And at the moment, they're buying up small little ones here and there. They call them maisons.
Maisons.
Yeah, and they're buying up these things. So they all got cash on the balance sheet there, eh? And
So
they're all
that could
looking
be-
for something
But I suppose the problem is then those prices are elevated as well.
and that's
You
one
know,
of
if
the
you've got
reasons
some-
why the prices are
Yeah.
naturally high
Yeah.
in this. Well, their ratings are naturally high
So
in
it
this
climbed,
sector.
it went sideways a little bit. What are you
Yeah.
thinking, Hot? I mean, it's a fairly elevated price to
It
earnings
looks-
ratio, but
It does look elevated. Man, I'll go not hot here. 26p, I mean, this is high quality, but if they themselves are a bit cautious here, I would also be a bit cautious.
Okay, well, I'm going to go hot anyway. I like the outlook, and I've got a tendency towards over-optimism.